this is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. We are trying to build the 3 pillars. Number 1, strategy and or system. Pillar number 2 is to understand how risk management works, and the third, the big one, is the psychology part. And remember, if this is your first time, we are in the beginner module and we are going to end it in about a week or 2. Also remember that I have a 20 seconds delay on the chat. Hello Miguel, how are you? So the title for today is Trading Japanese Candlesticks, the sign language of the market. Remember everyone, 90% of traders lose money in the Forex market worldwide. And the webinars are not investment or trading advice. The webinars are for educational purposes only. Either way, don't trade. Hello Silas, how are you? Either way, don't trade with money you cannot afford to lose. So that being said, let's dive into the live markets and take a screenshot, everyone, of this. So we're going to talk about bullish and bearish candlestick formations. Okay, this is an old picture from the internet. I don't remember, it's from 2013-14, but it's just type in the Google bearish candlestick formation and one of these pictures is going to appear. Okay, so take a screenshot of this. We have a bearish candlestick formations, and then take a screenshot of this. We have bullish candlestick formations, and type in the chat done when you're ready. Type done so we can move forward. To the bomb, Silas. We are going to meet in about, what is today, Monday, Tuesday, Wednesday, in 2 days we are going to meet again in Portuguese. Okay, when you're done, Miguel or Silas, when you have took a screenshot, just type in the chat done so we can move forward. And remember, I have a 20 seconds delay on the chat, so when you type done, okay, great. So let's address the NZD JPY pair from yesterday, right? And daily chart, we're going to open a new one. NZD JPY daily chart, there you go. Okay, now if you are a beginner trader, everyone, hello Annie, how are you? Done. Okay, great. Rules. So this is the uptrend and this is the downtrend. Whoops, not this one. And this is the downtrend, and on the uptrend you are going to have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And in a downtrend you are going to have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And the trend starts with an extension. Now, rules for the beginner trader. Okay, let's write this down, everyone. Rule: in an uptrend, you can only buy bullish. CF stands for candlestick formations, and never sell bearish. CF stands for candlestick formation. Okay, this is a rule. And this is Forex Trading 101, okay? It's for the beginners. So if you're a beginner, this is the rule for and we're going to check the bullish and bearish candlestick formation in about a second. But this is the rule. In an uptrend, you can only buy bullish candlestick formations and never sell bearish candlestick formations. Okay? Now, if you're wondering, well, can I sell bullish candlestick formation? Well, why would you sell something that is going to go up, right? It doesn't make any sense. and we're going to clone, and similarly to the bullish is going to be the bearish rule. So in a downtrend, you can only sell bearish candlestick formation, and never buy bullish candlestick formations. So if you're a beginner trader, everyone, those are the rules, non-negotiable. So when we are in an uptrend, what we are going to try, to buy bullish candlestick formations when the end of the retracement happens. Okay, so we are trying to build your strategy, we are trying to build your system, whatever. So one of the things we are trying to do, we are trying to buy bullish candlestick formation when the retracement is over. Hello Eddington, just to clarify Passion's statements, he is referring to the direction of the trade, a long or short, not open and close in order. Thank you Eddington. Yes sir. In a downtrend on the other side, we're going to have the same downtrend, uptrend, downtrend, uptrend, right? And my downtrend line is wrong, downtrend line is here. So we are going to short, right? We're going to sell, and we're going to color code this in red. There you go. Clone. One more. Okay. So we are trying to sell bearish candlestick formations when the retracement is over. When he says buy a bullish, he means go long, or on a bullish and short on bearish. Yes sir, thank you Eddington. Yes, go long or go short. Okay. Now this is for beginner traders, because we talked about already that we can trade retracements, right? But this is the lesson number 1 on the candlestick formations. So those are the rules. In an uptrend, you can only buy bullish candlestick formation and never sell bearish. And in a downtrend, you can only sell bearish and never buy bullish. Okay? This is for today. Next webinar, we are going to talk some other stuff. Okay? Now, we are going to talk also about how to form a strategy or a system, right? And we are going to summarize 1 + 1 + 1 what we have learned so far about structure, the market wave, the short-term trends, the extension retracements, the pivot points, the support resistance, and other stuff. Now today we are going to learn about bullish and bearish candlestick formations. Okay, so if you didn't, if you didn't take a screenshot of this, okay, just take a screenshot and put it on the side of your screen if you can. And we're going to go like this. This is the Japanese NZD JPY, and we are going to, I'm going to delete this one, and where is the starting point? Okay, we are going to go from here down to here. Okay, and we are going to sell bearish candlestick formations. I am the official translator. Yes you are, yes you are. Thank you. Okay, so you don't need to remember the name, everyone. You don't need to remember the bearish shooting star, the bearish evening star, the bearish engulfing candle, the bearish dark cloud cover, and the bearish tweezer top, but you need to remember at least partially how it's formed. Okay, now the picture is theory, the live market is a little bit different, Sometimes it's going to happen like this, sometimes it's going to happen a little bit differently. We're going to have more candles between the candle on the left and the candle on the right. Also in here, sometimes we have different candles in between. Okay. Now remember, as not all highs and lows are relevant, let's write this down. Remember, not all bearish, CF stands for candlestick formations, not all bearish candlestick formations are relevant. This is why it's so important for you to understand and to learn the market wave. So if we are going to see and try to sell, so this is going to be extension, right? Let's say extension, retracement, extension. Okay, now we don't have the crystal ball, so until here we couldn't confirm anything and everything, right? But starting from the second lower high and starting from the second lower low, we can confirm the down structure. And let's go. This is going to be our downtrend line. Okay, now remember what we are trying to do. We are trying to sell. I cannot move the arrow on the picture, but we are trying to sell bearish candlestick formations in a downtrend when the retracement is over. Okay, so we don't have the crystal ball. Let's go step by step. So we have what? We have a counter trendline break here, and the market start to making higher highs, higher lows. And let's go slowly, let's go slowly. And what else? We're going to monitor the counter trend line break. One more, there you go. And we are going to try to form a strategy, meaning we are going to sell the bullish or the bearish candlestick formations, and we are going to put our stop. One is going to be above the formation, the other one is going to be above the downtrend line. Okay, now if you look at this one, it's not the perfect example, but this is a bearish shooting star. Oh, Passion, but you said we don't need to remember. Yes, but I'm telling you the names for you to check on the picture. So as you can see, the bearish shooting star on the picture is theory. Now the live market is this one, right? But the question is, should I sell this one? Remember, not all the bearish candlestick formations are relevant, right? So how do I know? How do I know that the market is over, right? How do I know that the retracement is over? We don't know yet, so we are going to wait. See? If I would just sell this bearish shooting star because it appeared, and if I would put my stop loss 15 pips above the bearish candlestick formation, I would lose on this trade. So remember, not all the bearish and not all the bullish candlestick formations are relevant, right? So we are still monitoring the counter trend line, maybe this one like this, and we are going to draw another one, and we are going to draw another a little bit more aggressive. Okay, so let's see, we don't have the crystal ball. Okay, now though I'm going to put a smaller arrow. There you go. Is this tweezer tops? Everyone, what do you think? Those two, are those two candles the bearish tweezer top? What do you think? Also the next was bullish shooting star, yes. But remember, in a downtrend we are focusing on the bearish, not the bullish. Don't even look at bullish candles, everyone, in a downtrend. Try to train yourself to spatially see the bearish candlestick formations. So is this a bearish tweezer top? You can say yes, you can say no. You can say I don't know, I'm not sure. And our stop loss is here. We are going to move our stop loss. So we need to see the end of the retracement. So the market is pushing up, up, up. I'm going to extend my counter trend line and bam. So we don't see, right? To be fair. Now this appeared, and one more. Let me see if it did break the counter trend line. So one more. Okay, now this one. Okay, there are the dodges. We are not going to talk about the dodges, Miguel. We are just talking about plainly just the candlestick formations. Okay, so those two, no, this is not tweezer top because it must have long wick on the upside. Those two, everyone, those are not tweezer tops. The question, is this one the bearish evening star? What do you think? Is this 1, 2, 3 a bearish evening star? Remember, one is theory from the picture and you can find it on the internet. The other is the live market. The bearish evening star, we need to have a white candle moving up, a candle with a small body, we have it, and then we need to have a blue candle or a bearish candle pushing down. And it says yes. Okay, now if you find this candlestick formation, okay, what do we need? Well, we need to see the market breaking the aggressive counter trend line, right? So we are going to, Silas says no. Okay, yes it is. Yes it is. This is the bearish evening star, everyone. Okay, why is that? Because this is the live market, the picture is theory. But we are not going to enter yet. We don't have the counter trend line break. So one more. See? Now we have a counter trend line break. Where is the counter trend line break? But the market pushed higher, so no entry so far. Okay, what about this one? Is this a bearish evening star? Is this a dark cloud cover? What is this? The dark cloud cover says that the bearish candle must close at least 60% of the white candle. Did the blue candle close minimum 60% of the white? What do you think? We can see this spatially, right? And the wick also. Well, if you're in doubt, everybody stay out. Okay, but we can measure this, so we can measure this. So this is 100%. Just graphically we're going to measure 100%, and somewhere in here is 50. So I would say yes. So this is 60%. So this is yes, this is the bearish dark cloud cover. Okay, now one more thing. This bearish dark cloud cover, Joe, how are you? This bearish dark cloud cover happens after the counter trend line break. So we would enter the market, shorting the market in here. This is going to be our entry point. Let's color code this in green. Okay, and number one, we are going to put a stop loss. If you don't have enough capital, put a stop loss 15 pips above the candlestick formation. If not, put your stop loss level above the downtrend line. Okay? So the lesson for today, what you need to learn is that not all candlestick formations are relevant. Okay? You cannot just plainly sell or buy, or as Eddington says, you cannot just go short or go long because you see a candlestick formation. It needs to appear on the right place, in the right area. Okay, so short the market in here. When the candle closes, let's see what is going to happen. Okay, moving up, bam, stopped out in here. Stopped out in here on the first stop loss. On the second we are still safe, and maybe stop loss stopped out also in here. Okay, stopped out 2 times, clone, stopped out 2 times. Okay, and what, we're going to extend our counter trend line and move on. The market still moving up. Okay, another bearish candlestick formation appeared. What is this one? Is this the bearish engulfing candle? Right? What is this one? Is this the bearish evening star? Right? Most likely this is the bearish engulfing candle because it engulfed the first one, the second one, right? So are we going to sell this one, or are we going to wait for the counter trendline break? Okay, so yes, we are going to wait for the counter trendline break. Let's see, our counter trendline is here. Okay, is here. We're going to wait for 1 more, 2 more. Let's see the market. Okay, the market's moving sideways. Bam, another bearish engulfing candle. So this time we're going to adjust our uptrend line in here. Let's color code this in black, not to mix with the stop loss. Yes, but the candles are not big. Wait, there is no rule any how big or small are the candles. Okay, there is no rule. You have, sometimes we're going to have tiny bearish tweezer tops. Okay, now this is a bearish engulfing candle, so we are going to enter here. Stop loss number 1, 15 pips above the formation, and the other stop loss is going to be 15 pips or 150 pipettes above the downtrend line. Okay, so we are in the market. Let's see the market moving up. Bam, the first stop loss hit, we lost again, and again we have another bearish candlestick formation. Come on, there you go. What is this, everyone? Is this the bearish shooting star? An up candle, center candle with a long wick. Look at the bearish shooting star. Okay. Oh, Passion, but these candlestick formations, they don't work. Yes, they do. Yes, they do. The problem is that not all of them are relevant. But when you say, oh, this bearish candlestick formation, they don't work, remember, we don't have 100% rates. Okay, nothing is guaranteed, not the Fibonacci. Okay, so time to time, if you are going to short or sell candlestick formations, you are going to lose. Shooting star, yes sir. Okay, so we're going to address. So the counter trend line happened. Okay, the counter trend line happened in here already. So if you had your stop loss tight very near, you would be out, the market would stop you out, but for the one who are above the downtrend line, they are still in the trade. Okay, so we are going to enter again, selling this here, we are going to have another here, and again, let's say that we don't have enough capital, we are going to put our stop loss 15 pips or 150 pipettes above the candlestick formations. Okay, Evening Star, says Joe. Evening Star, I don't have it on the screen. I have Bearish Shooting Star, I have, oh, Evening Star, okay. Yes, it can be, yes. Okay, so let's see what is going to happen. Moving down, bam, stopped again. Lose again. The trader with the tight stop lost again. Let's see the market moving, finally, okay. Now, the trader who is here still safe, we can extend it. Okay, and again we have another bearish candlestick formation. Okay, now there is no right or wrong on the stop loss, but as you can see, everybody, if you are going to put the stop loss near the formations, many times the market is going to stop you out. So better to put your stop loss above the market structure, above the market wave, in this exercise above the downtrend line. And let's see, I'm going to put a horizontal line because we don't see the future, we don't have the crystal ball. I'm going to adjust my downtrend line. So this is the downtrend line adjustment right now. Okay, so we are here, this is the third time. Okay, so the second one is not valid anymore, but we are going to enter again in here. So first candlestick formation, bearish, the one with the stop loss above the uptrend line, they are safe. The second above the trend line are still safe. Now the third time, okay, we are going to adjust our stop loss because the downtrend line moved up. Okay, and again, two different stop loss levels. One is going to put the 15 pips above the candlestick formation, and the second one, if you have more capital, you can put it above the downtrend line. Now let's see, the market's moving down, sideways, moving up, right? We are going to extend. Another counter trendline break in here, clone. Now talking about trading and making pips and money, if we are at the end of the retracement, this means Max changed his name, look at this, Crystal Ball. Hello Max. You should change your name to FX Crystal Ball, Forex Crystal Ball, or Crystal Ball FX. Okay, so if we are monitoring and we have the confirmation that this is the end of the retracement, now every bearish candlestick formation should make us pips, give us pips and make some money, right? And remember, you need to be aware of the stop loss. Dear students and teachers, where is likes? No likes, no video. Yeah. Yes, thank you Max. Please like the videos if you find useful what we are teaching you. Okay, so we're going to have a third entry. Remember in here, we lost 5 times. We lost 5 times. Okay, short stop loss equals to 15 pips above the bearish candlestick formation. Okay, until now, if we were trading and put a stop loss 15 pips above the bearish candlestick formation, we lost 5 times already. Okay, yes, it happens. Okay, remember to trade your plan. If you're a beginner trader, remember that losing trades are going to happen because we don't have the crystal ball. Okay, but on the other side we have the first trade, which is in profit. We have the second trade, which is more likely break even. We have the third trade, which is break even, and now we are going to enter in the fourth trade in here. And again, stop loss, we're going to move the stop loss together with the downtrend line. Okay, let's see what is going to happen. Sideways, moving, the market is moving up and down, sideways. Okay, so looking here, everyone, we lost 5 times. Passion, why you Nokia 331 always vibrate on lesson? Maybe there are silent mode. Well, my Ericsson from 1976, you know why is that? I don't have the silent mode. I have the Ericsson from 1986. It doesn't have a silent mode. Okay, now question for you, everybody: how is possible to make money if you lost 5 times and on the other side you are winning? You are winning, right? You are winning. So we are in 4 trades, so we are winning 4 times, right? 4 times. We are winning 4 times. Short stop loss, no, we need to edit. It's the stop loss, and again stop loss above the TL trend line. Okay, we lost 5 times. Now we are winning so far, right? So far we are winning with the 4 trades. Ericsson, yes. Last Ericsson still live in Brazil. Yes, it is. Okay. Everybody, even though we lost 5 times, how is possible that when the market falls until here, we are in profit? Until here we are in profit. What do you think? How is this possible? We lost 5 times, but we entered 4 trades. We are shorting the market. 4 trades, and the market just falls in here, and we are already in profit. What do you think? Well, answer number 1, for the one who had the stop loss above the downtrend line, the stop loss was never hit. Agreed? But for the one, let's say I don't have 10,000 US dollars, I have only 200, right? So I cannot allow myself to risk 20%. I can allow myself to risk 2%, 1%. So okay, I lost 1% 5 times. Yes, correct, Victor. It's all about stop risk reward ratio. Okay, now, so the market is falling. What we are going to do? Nothing. We are going to wait. Okay, and what we are going to do? This is a technique, everybody. We are going to put, now that the market has formed, we don't know, let's wait another one. One more. Now that the market has formed a lower low, okay, the market has formed a lower low, high, low, high, low. Now that the market has formed a lower low, what we are going to do, and we are going to color code this in orange. There you go. The market has made a lower low. What we're going to do, or you cannot use trade in channel. I don't use channels, but nothing wrong about channels. I just don't use it. Okay. What we're going to do, we are going to put for all the entries our stop loss to break even. Okay. We are going to put our stop loss to break even. Or if you want, if you are happy, you can pocket your profits. Okay, there is no right or wrong, but what we are going to do, we are going to put our stop loss to break even. Okay, when we do this, we don't have any risk in the market. Okay, there is no right or wrong. You can take your profits, you can put your stop loss to break even, and just monitor the market. Okay, market moving sideways, falling down, going sideways, moving sideways, moving down, moving down. Okay, now when the market has formed a new lower low, what we are going to do, and there is no right or wrong, we are going to put our stop loss above the previous high, which is in here. Okay, so if the market is going to fall, it's going to make us more and more and more profits, more and more money. Can you do that? Absolutely yes. Why not? This is a technique, it's called cancel and replace. So, or you go with the highs and lows, or if you want, you can extend the downtrend line. Okay, so this would be the downtrend line. Okay, now if the market is going to fall, it must make a lower high, right? So stop loss number 1 is here, stop loss number 2 is here. You can go with the downtrend line, right? What about your losers? You still win, be losing some money? Absolutely yes. Absolutely yes. I'm going to show you. Horizontal line. I don't know if it's going to show more, but we don't have the crystal ball, right? Let me see, let me see. Okay, now, great question. Great question, Victor. Okay, now, just graphically, we don't have, but you can check the numbers, but just graphically, right? This would be one stop loss short, right? And this would be the second stop loss short. Short stop loss. So the quadrant, I'm going to delete the orange line. Look at the quadrant. Look how big is the quadrant. This was the short stop loss. 15 pips above the candlestick formations, right? Stop loss in here, stop loss in here. Clone. Stop loss, whoops. Clone, there you go. Stop loss in here. Come on. So, can you see the stop loss? How big is the quadrant, Victor? Kainat, hello, how are you? Now look at the profit level. Most of the entries were made from here. I'm going to delete this one. The 4 trades that we are trading were made from this area, the green one. And the market, Victor, is here right now. Can you see the difference? How can you win? Everybody, do you understand this? Can you see the difference? We've been stopped out 5 times with our short stop loss because we were entering prematurely, of course. We don't have the crystal ball and we don't have the money to put our stop loss above the downtrend line, right? but then finally the market reversed, the retracement of the market weight was over, and then we just entered. So short stop loss doesn't mean anything, but you need to continue to trade. Okay, so everybody, extremely important question. Thank you, Victor. Can you still make money with losing? Yes, you can. It's all about risk reward. Okay, I will close my trades. There is no right or wrong. You can close your trade, or you can put your stop loss above the most recent, or at least above the previous high, or above the downtrend line, right? And you can close your trade because the market made a new extension if you want. Okay, now let's dive in the chart and see what is going to happen. So we are here, stop loss, I'm going to delete the vertical line. Market's moving up, 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 and I was stopped out. No problem, I was stopped out with profit, right? Okay, not the best one, Victor, because I won maybe a little bit more than I lost. But for the one who are above the downtrend line, right? But remember, everybody, we are not over. We are trading. We want to short bearish candlestick formations in a downtrend. Yes, I understand, but you said we put our stop loss will be by the entry of the pair. That means we are waiting to come back. We put our stop loss will be by the entry. Oh, to break even. Yes, in the beginning you can do it. You can do this. Yes. There is no right or wrong, Victor. There are just different types of how you manage your trade. Okay, so let's wait, and bam, another bearish candlestick formation if you want. So if you would put your stop loss above the downtrend line, you are still in a trade. You are still in with all of them, all the 4 trades. For the one, if you are here, you would be stopped out in profit. Okay, so you don't have any loss anymore. And if you want, you can short another bearish candlestick formation. Which one is this, everybody? Look at the picture on the right. What do you think? Which one is this? Is this the shooting star? Is this the evening star? Is this the bearish engulfing? Is this the dark cloud cover? Bearish tweezer top? What do you think? Okay, so let's see, let's wait. So we entered in here, closed candle, our stop loss, or 15 pips above the candlestick formation, or if this is going to be the new high, 15 pips above the downtrend line. Okay, so let's see the market. What? It's falling, right? Moving sideways, still falling, and of course we need to adjust our downtrend line. Okay, let's see, the market is moving sideways, up. Okay, one more, bam. Okay, now, so if you would go with your stop loss with your downtrend line, you would be stopped here, right? Or the other, the same, you would be stopped in here. Okay, so if you would not manage your trade and let the market reverse, you would end with a small loss. Okay, and if you would manage the 4 trades starting from here, you would end like making this. Any questions so far? Any questions? We are trying to show you how to sell bearish candlestick formations in a downtrend. We are trying to show you different techniques about the stop loss with the take profit and everything. We are trying to show you where to put the stop loss to break even for you not to have any more risk. Okay, there are different techniques, no right or wrong. Silas went out in here. Okay, there is no right or wrong, just different techniques. Now, talking about to form a strategy. Okay, this is just an example. So strategy. We only sell now. Yes, we only sell now. Yes, sir. Strategy. Okay, there is no right or wrong, everybody. You can use what you like. You can reject what you don't like. Okay, I will go short when I see number 1, CTB stands for counter trendline break, end of the retracement, Number 2, bearish candlestick formation at some level of past resistance. We learned about resistance or pivot point. Joe, how much is stop loss? 1 and 2 again, please. Okay. Now, okay, I'm going to go up in here, okay? I'm going to delete a few things just for you to see. Delete. Okay, now, just give me a second, Joe. So, this is the downtrend line, and clone, just. There you go. I'm going to delete a few things. Okay. Now, if you want numbers, so we entered in here. Okay, we entered in here. The high of this bearish candlestick formation was. You can use the tool. So the high of this candle in the middle is what? We're going to use the tool, and the high is, let me see if I can move this here. Okay, move it in here. So the high is at 81064. Okay, so your stop loss is going to be at 81 plus 150 pipettes. Okay, so the stop loss is going to be at 81.2, right? 214. So 214 coordinates, not this one. Okay, let's differently. 21. Oh, it must be horizontal line. That's why. Okay. So stop loss number 1, red, is going to be at 81.214. Okay. So this is the first stop loss above, and the other one is going to be 150 pips above the down trend line. So if this is the horizontal line, you just measure, Joe, you measure. So this is the trend line, is at 1.422 plus 150 gives us a total of 81.572. 81.572. Okay, Now you have two different stop loss areas. One is above the candlestick formation, 15 pips or 150 pipettes, and the other one is 15 pips above the downtrend line. Okay, Joe? Did I answer your question? Knut says, when we enter in trending market change trend or hit our stop loss and then move in trend. Why? When we enter in the market change trend or hit our stop loss and then the move in trend. Why? Well, I don't know if I understand correctly your question. If you are asking why the market change, the answer is I don't know. I have no idea. The market can do anything it wants when it wants. Okay? Because you don't have a crystal ball. Great. Okay, crystal ball. Okay. Okay, great. Okay. Let me see. Knut, what we know so far is, I'm going to go on NZD CAD, alright? NZD CAD monthly chart. And if this is your first time, Knut and everybody else, go back and go on the Ducascopy webinar page and learn from the first lesson. Okay? What we have learned, what we know, Knut, is that if this is the downtrend line, of course this is going to be just an example, okay? And when you know structure, right? And you know the highs and the lows and the market wave, there is no right or wrong, it's just a technique. You put your stop loss up in here and you would wait for the market to make a new lower low. When the market is going to make a new lower low, you are going to adjust your stop loss and put it in here. Okay? Why? It's not a rule, it's just a technique. Okay? And why here? Well, this is the most logical place to put the stop. Technically speaking, we have learned if the market is going to stop you out, it's because it's going to change structure. Okay? Everybody, if this is your first time with us, go back and watch the webinar starting from the lesson number 1, the market structure, and watch all the webinars over and over again 2 or 3 times. Okay? So, strategy, I will go short when I see counter trend line break, end of the retracement, bearish candlestick formation at some level of past resistance or pivot point, right? So this is the downtrend, this is the downtrend line, and we are going to enter a short trade in here only and when, everybody, only and when, and if we are going to see number 1 a counter trend line break like this one. Okay, there you go. A counter trend line break like this one, the blue one, and together with the bearish candlestick formation happening here at some level of past resistance, and we have, right? We have here past resistance. Okay, this could be one of the strategy. It's not perfect, of course, there is no right or wrong, but if you are going to wait for this and if you are going to enter when you have a counter trend line break with the bearish candlestick formation at some level of past resistance, you are going to have a higher probability and a better probability to shorting the market comparing to the traders that are just shorting counter trend line breaks, or they are just shorting bearish candlestick formation. So the more reasons, yes, Knut, please do this, the more reasons you have to short the market, the higher the probability. Okay, everybody, our time is up. Rakesh is coming on the stage. Stay strong and trade with passion. This is FXPassion signing off.